Good turnaround Tuesday, everybody. How you doing? Richard, Brock. Hi, Ryan. How are you, my trading warrior brother?
Morning, Coach. How are you?
Pretty good. Turnaround Tuesday. Hugo, yen almost got to that line, Ryan. About 30 pips away.
Well, I can't see your screen. Morning. Can
Well,
anybody
I
see the
know
screen?
I haven't done it. I'm still
Oh,
saying
sorry.
hello to everyone.
Oh,
Sorry,
very
Relax.
good.
Hey,
Stell?
hey, Stell.
Just like my wife says, I'm always premature, right?
Stell. No. Try decaf.
Yeah, good point. Good point.
All right, buddy. So anyway,
Very eager.
let's see. Let's pull up the screen so Stell can relax. All right. There you go, buddy.
Yeah, chop,
Feel
Dale.
better?
Come on.
Huh? All right. So
I
anyway,
I don't see it. I really
no
don't see
kidding.
it.
You really
Oh.
don't?
No.
Oh,
You see?
that's because I didn't resume the share.
There you go. Got it.
Oh man, I was even getting nervous. All right, so this is what I was hoping for. I don't know if it's going to happen. Blake Skyped me last week and said, how come I'm not showing some more 3 drives? And I thought we might have one in the Dow, but the way the S&Ps are acting, I'm not sure it's going to take a little bit of a surge. I also noticed that Amanda had some sells in S&Ps yesterday, so maybe it's going to get going. I don't like to fade Amanda, and either would you if you're in our community. Yeah, so anyway, just another talent in our community that's been there for a long time now, helping people. So, I'm not sure if this is going to happen. Maybe the correction's just going to start from here. The strength is NAS today. Um, the S&P is the only thing that bothered me on short-term stuff, even on the 15-minute, I believe. Yeah, up here we had a confirmed high, but the correction could begin, and there could be 100 handles, and then we could still go 4,800, 4,900, 5,000. But maybe we have something intermittent here, and this is what I was talking about with Ryan on the yen. I thought Friday that we could head back down to this breakout line.
Yeah.
And we got pretty close. So, my line's coming in, about 1240-ish or so right here. I see that there are a lot of triggers here that some of the guys have 12 and a half, got down to 72. Could be close enough for government work. Maybe it's not going to accommodate people. So nice little reversal possibly happening here in US dollar yen. And maybe that means that this pullback in the dollar was pretty temporary, and we're still going to break out or take out the 94 and a half level, which would give you a little risk off in equities, not a crash, just a little risk off, and means that maybe the run in the metals, although they look great, if the yen could really reverse, maybe we could get one more pullback in silver, which was weaker than gold, and gold's up against this 1833 resistance, so not quite there on this big triangle where everyone's going to declare a breakout in gold to the upside. So precious metal bulls, keep an eye on US dollar yen. Maybe this is going to be a time that it disconnects, but if we're going to take out the highs and trade 116 and a half, and if I'm looking to buy precious metals, I'm going to be patient and see if it has any, puts any pressure on the precious metals to create maybe a break, halfway back from the Fed to wherever we peak. If the yen makes another move back up towards 116. Yeah, silver does. And, we talked about when we were up here I saw 2 scenarios, a right shoulder, which I didn't react to on the Fed, or we were going to make a new low for a third drive. So I thought we were going to have to do a little more work around the right shoulder, kind of like we did on the left. But, so far, can't argue if you bought it in that range, it has pretty good symmetry. Very good eye, Amira. So, guys, anything? I mean, foreign exchange is pretty quiet this morning. Any reason why we're,
I think it's I think it's just purely a case of we're coming off the back of the central bank meetings, as I said yesterday.
That's true. Yeah.
And we're just gonna be finding the levels where we're gonna sit and find a range. Dollar yen nearly got down to that level. A lot of eyes on that level and down to 112.
Yeah.
If you look at the chart from a wide perspective, something like the daily or the weekly, if you were just stepping into that chart from a fresh, you'd be thinking, wow, that's another big hold of the big 114, 115 area. So
a rejection, you mean?
Yeah, big rejection. And let me see if I can. Can I have a go at sharing my screen? Let's have a go. Let's see if I can do
beautiful. This is all that Ryan's about to lose his virginity and face.
Yeah, let's see. Or I could shut the whole thing down. Let's have a look.
Oh, there you go. Wow, you're psychedelic, bro.
Yeah, I love a bit of color, me. But that, look at that.
That's a Pink Floyd chart.
Need your sunglasses for it. Okay. We've got a big rejection off that area, and look how big that area is going back 5 years, 6 years. So when you look at things from a wider perspective, I wouldn't be surprised if we get a move down to at least a 38.2 fib there. That wouldn't be uncalled for. That's not even it's a big move, if we're talking day to day, but in the grand scheme of things, that wouldn't be a big pullback. That would be a nice refreshing pullback. I've got two sort of color shaded bits there. That's where I'm perhaps expecting the ranges to develop. Either we're developing this yellow range, between 11450 and sort of 1111. If we get under 111, then perhaps we're going to be back in the old box, that 108, 110 box that we had the last few months.
So Ryan, I'm sorry, I hate to interrupt. I just want to say that the 38% retracement, if that does happen, which I couldn't argue that right now, that would take us to about 110. Is that correct?
110.07, give or take.
Well, okay, cool. All right. Thanks.
What do you think of these charts, Blake?
Dude, I think I love having the logo there. I don't know why it doesn't have Forex Analytix logo, but I think it's great.
I haven't watched out. I put it there yet.
Oh, there it is. Oh, I see. All right.
No, I actually think it's really cool. It's really cool.
Really?
Yeah.
I'll be updating it once I get to know how to work this system. I'll update them all. But,
no, but anyway, I didn't want to interrupt. I just wanted to clarify that that's the level, because that's what I was seeing is around 110. Because you put out a big post today about the 112 level, and I'll let you expand on what your thoughts were there.
Yeah, I mean, you can see it on my chart there. I've got 112.50. This level has been one of those levels where it pops up now and again. It's one of the ones that stick in the back of your mind. Every time you get close to it, you think, yeah, that's a level. And you can trace it all the way back. I mean, it goes back earlier than 2012. I think it goes back to sort of 2008, 2009, if you look back far enough. So it wasn't much on the way up, which was, given the trend that we saw, with all yen pairs, it didn't do much on the way up. But, you think, is it going to do something on the way back down? You can't ignore these levels. And if it becomes a solid level, then you're looking 112.50 to 114 again. But get back below, and it extends the range. But the poster I was talking about this morning is there's a lot of people focusing on this 112.50, 112, and that tends to make me a bit uncomfortable, because if there's too many people looking at something, it invites a bit of shenanigans, and maybe we see everyone piling in longs, and then suddenly they get flushed out, and we're going to move down to 111.50 or something, clear everyone out,
or it doesn't get there, Ryan.
Or it doesn't get there. Yeah. Exactly.
Like today, I mean, we're at 1270 low, and it's trying to turn. Everyone waiting for 12 and a half or so, they won't be accommodated.
People think they miss it and they chase it.
And that was my thought. I was going to mention that, Dale, and I'm glad you brought that up. And that's what I did.
The Vulcan mind meld on you.
You did it really well. But I was going to say in my analysis as I got up this morning, and I posted it in Forex Analytix, my thoughts were, because this is my chart of the day yesterday, Ryan, it was the dollar yen, and I'm like, okay, did you just Do you want me to show the charts?
Yeah, I didn't know if you wanted to pop yours.
Oh, I'll show you the charts. Okay, here.
Okay.
Let me,
I didn't break it. Good news.
No, you did fantastic.
That's a headline for our tag for the description today for our session. Go ahead.
Ryan did not break the computer. So talking about the dollar yen, in the update, and I'll just kind of read this to you guys so you can see it. If you go to update timeline, sorry, you go to the dollar yen right here, basic technical analysis that was just sent out 33 minutes ago, right? So you're seeing the same chart that I'm showing you on the webinar. But as noted in the chart of the day yesterday, dollar yen should find buyers in the 112.20 to 112.80 range. Dips were limited to 112.70. We were already back above the 113 level today. And this is the, if you take this last leg higher, the 127% extension comes in at 112.55, whatever, real close to that big, as you can see, I have it highlighted in red and blue. It's a big zone. And as Ryan pointed out, it's been big for, you can go back into the late 90s, actually. I think 99, if I remember correctly, that the 112 area is significant. But the point I'm trying to make here is this, as Ryan did point out, this is a very significant level. And but I can't ignore, and this is the one thing that I was just saying in the chat room. If you guys are not familiar with this is the Forex Analytix chat room. And you can see that, just conversations we've had just this morning about Ethereum and, everything else just over the last hour and a half. I was talking about the dollar yen. The one thing that I can't get out of my mind here is this is very impulsive. And Grega is going to be on the webinar today talking about, Elliott waves and impulsive moves. An impulsive move is basically a very strong and sudden move. And usually those are trend establishing type of moves that you don't want to really fade. You want to try to go with them. And so when you have a real strong, like I said, these are very, look at how strong these are. I got stuck on the wrong side of, I think, this move, right? Somewhere around here, right? So you don't want to get stuck on the wrong side of these because it's just going to run you over. And there's not much, it's hard because they don't retrace. So those types of moves still have people trapped in them, which keeps them bullish. And that's why I'm skeptical about trying to fade the dollar yen. I'm more likely going to be going long. And that's why, going back to the conversation that Dale was just bringing up, maybe that was it. There's so many buyers waiting here at the 112.50 level that maybe that 112.70 was it today. And I'm not saying, and I'm not going to sit here and chase it. I have bids out in the market right now. I have them overnight and I have them set to expire in a couple of days. So I was looking to buy dips to 112.50 all the way down to 112.25. And I'm wondering if they're going to get triggered. So what are your thoughts on, maybe it's just so strong, Ryan, we don't even get down there?
Yeah, it's all possible, but this is why we watch the price action. We've had a bounce off that 70 level. It's got back into 113. If it doesn't stay there for long and we get back down to those lows, then you're going to be starting to think, right, well, maybe I'm going to get me 112.50s. But if those bounces, if we start seeing a sort of step down, you've got to be worried about the level. The longer we spend trying to get to it without bounces, then the more you're going to think, right, well, these buyers better be strong, or if I'm going to get in, I'm going to keep it tight, because if it goes, it's going to go. Because
one way to illustrate that is just what I'm drawing here is if you stay in this box and you're not bouncing, then it's now the likelihood is increasing that you are heading back down here. So good point of view.
The same thing in euro dollar. I was sitting on the bid at 115.10, 115.05, playing the barrier, the big figure, all that stuff down there. We got the bounce above 116, but we can't stay above 116, and now we're looking a bit soft again. And you think, if you want the perfect scenario when trading these big levels, you want that first test, you want to get in on that first test, and you want to ride that first bounce or the first move from that big level. If you don't get that, and then you're coming back to the level again and again and again, I call it the knocking on the door syndrome. If you knock too many times, you're going to be let in. So you've got to be careful with, it's all right saying, I'm buying 112.50 now, but if if we're sitting 112.60, 112.55 and can't get higher than 112.80, I'm going to be thinking, do I really want to be long at 112.50? Because the price action's saying something completely different.
Yeah, that's great points. And I know Greg is going to be popping in here. I just want to say regarding the euro, just keep in mind that the euro is actually making, and this is a point that I was making in the chat room a little bit earlier and yesterday in the daily roundup and the morning edge. You know, if first of all, as far as the euro goes, I'm just hoping for a move back up to retest this trend line here at 116.50, and it's now 116.40. It's a descending trend line, so it is, you know, moving down every day. What I mean by that, but what I was pointing out yesterday is if we can't even make an hourly higher high, which we didn't, we rejected the 116 as Ryan just pointed out. We can't even make a higher high on an intraday basis. That puts the risk back down at that 115 level. And what he was saying is it's trading soft. So, you know, while we're, you know, even at a bounce today, if we can't scale back above the intraday highs, I'm going to lay into a short, right? So just think about that it is continuing and it's, you know, a trend lower despite the little false breakdown that we saw on Friday that was probably more flow related than anything following the NFP. But hey, let's see if Greg has got something to say. So Greg, are you here?
Yes. Hey, good morning.
Hey, you were just waiting for me to shut up.
Hey,
glad to have you.
I'm listening.
All right.
I'm listening carefully what you had to say about the dollar yen and dollar in general. So I just think that the overall dollar move, when, as you know, I'm focusing more on dollar index, and Dale will know that I've been talking about this one recently. I just think that this dollar recovery has mainly came because of speculations that sooner or later Fed will do the tapering. And now when they finally announced it, well, actually that's when actually the cycles could change. And if I try to do a combination with technicals, I just think that we are at very important levels.
We are, and I will not disagree with you. I mean, if on the week ahead videos over probably the last 2-3 months, really, we've talked endlessly and in nauseam about this 94.70 level, which is a 38% retracement of the whole COVID move. It is, you know, the difference between the the dollar index continuing in a bearish trend or reversing into more of a consolidation, or what would you call it in Elliott wave terms, a flat, I guess. You know, so I think that resistance is so huge, and that's why we have to watch the dollar. But, you know, I want to point this out before I let you take over the charts here, Greg. I just want to point out there's something really key that's happening this week. It is, you know, obviously Powell's job as Fed chair is right now in jeopardy. And the reason why we know that is Brainerd was in the White House yesterday. It was confirmed yesterday that Brainerd was talking to President Biden, about possibly being Fed chair. Now, you may take a step back and say, well, I get Powell, I get Brainerd, doesn't freaking matter. Both of them are extreme doves, so the dollar's going to stay bearish. But what if one of those two are not Fed chair? If that happens, the dollar will rip. And there's nothing that my technicals have nothing to do with that. That becomes more of a fundamental shift in the chair of the Federal Reserve, arguably the biggest reserve bank in the world. So and most influential. So that's the big, like, you know, what if? And I sit here and go, okay, Brainerd's she's jockeying for the job. Powell's got the job and he may stay in, but now it's looking like, you know, he might not. And Brainerd, you know, she's obviously in the running, but who else is in the running? If it's somebody else, that's what changes the dollar. And like I said, there's no technicals that I'm looking at or anybody else is looking at that's going to make a bit of difference.
I heard that Steve Volke is being considered.
Yeah, that's quite possible as well.
That we're going to have a lot of tightening here.
He'd be a great Fed governor because he would outlaw crypto, and and that would be that.
Like that choice.
Anyway, hey, I'm going to let Grega go into charts here. We've so Grega, show us what you got, man.
Yeah.
He'd balance the budget. Yes, he would.
Okay, so I think that technical levels that I really should pay attention on, or that I just cannot ignore, is firstly visible just for basic technical chart here on a weekly. You can see that we are now retesting this trend line from the other side. So it's very important level here on a weekly, and this comes very nicely in line with the Elliott wave principle, where notice that we have potential wedge building right into these very important levels that are also matching with these 2020 lows here, and also obviously swing highs here back from a year back. So I think that this wedge is also very important. It's not indication of an accelerating price action, but rather a slowing price action that occurs at the end of a trend, either at the end of a 3-wave movement or even a 5-wave movement. So I still think that this is a very important key zone, and I would not be really surprised if we see a sell-off. So when it comes to dollar yen that guys talked about earlier, I just also think that on dollar yen, we should be aware of potential limited upside. Looking at the bigger scale here, move up from January is in 5 waves, and notice that this 5th wave has already reached this triangle measurement target. So again, it could be a little bit overstretched moved. So just be aware of potential slowdown maybe towards the end of the year. This is still a process, not just things will not unfold in a week or so, but something that should be considered whenever you are making maybe some trade ideas here. But still, looking at the 4-hour chart, you have only 3 waves down here on dollar yen. So if we suddenly rally, let's say back above or towards 114, I think there is a chance to catch more upside for a 5th wave towards 116 figure.
How do you come up with that 5th wave target, Grega?
With
at 116.
116, because I'm looking at the round figures. Okay. I always pay attention to those.
Okay.
Yeah.
And just one comment on the dollar. If you get that 5-wave wedge, that would really catch the market wrong-footed, as Blake says all the time, because people would be declaring that a breakout when all it has is another, 130 points left in it before it turns.
Yeah, another continuation.
You know what I mean, Blake? You always look for those wrong-footed things.
I do. I like false breakouts and false breakdowns. Those are some of my most favorite
sorry
trades.
I took some of your time, Grega. Go ahead.
Yeah. Don't worry. So now let's assume that maybe dollar is really approaching some very important levels, and that we could maybe, even if we just make a deeper correction, I just think that metals are still very interesting, and we've been covering this one for a while. Now looking firstly at monthly chart, as you know, we are currently consolidating, but holding very important support here around or above $21 with a 3-wave drop. At the same time, I see on a daily chart here potential head and shoulders formation. Of course, that's not the head and shoulders unless you see a broken neckline. So we are now slowly approaching to this neckline, and if we really can take this out, and let's say if we get a decisive break and daily close somewhere above $25, then I think that more upside could be seen. So with this basic technical approach, and again, combination with the Elliott wave principle, this is what I would be looking for. A completed wedge pattern that finished a higher degree ABC correction. So it was a consolidation, not a bear market, but a consolidation since last year of August, actually. So I still think that if dollar would be headed to the downside, I think that this one has a very big potential to the upside. So I will continue to look higher here on silver, and also will be looking for something similar on gold. Yesterday, I shared this chart for gold copper ratio. I think that this is quite interesting levels. I mean, we came very aggressively to the downside back into this multi-year support zone. So I still think that maybe there will be much more interest in gold, and that sooner or later cycles will change. And again, there will be investors looking for safety in gold. After all, we have a very extended move here to the upside on stocks, so I definitely would not be looking for any long-term investments on this one. But I just think that based on these ratios, that gold is something that we could maybe pay attention on. Now, if we also take a look on some commodity currencies, I think that Canadian dollar is still looking good on the short term. Looking here on a daily chart, the primary wave count here, very important resistance what was at 129.50, around there. We broke this channel and looks like that now we are trying to move to the downside. I think that there can be more, at least short-term weakness, because if we look closely on the 4-hour chart, okay, you can see that we are now consolidating, okay, with the 3 waves up from a new low here. And we have plenty of resistance levels when looking at the previous swing lows here at 124.20 and 124.90. So I think this perfectly fits to be a wave 4 here, and that we could turn back to the downside. Let's keep in mind that crude oil is also, again, pointing higher after it found a support after recent dip. So whenever we are looking at CAT, of course, we want to pay attention on crude oil. So looking at crude oil here, just to make sure if we are on the right track with CAT, of course, notice that this was a very nice pullback, but it was not in 5 waves, rather in 7 swings, which is corrective subdivision. So I'm looking this to be a wave 4. Also, very nice support was at 38.2%. And what is very important is that we are already rallying away from that level, and you're now at the channel of resistance. But the intraday bounce here looks quite aggressive, so I would not be surprised to see a breakout here, and this could maybe finally cause a turnaround on that dollar CAD to the downside. Maybe even CAD yen could be very interesting for more upside in this situation. If we take a look also on New Zealand dollar, this one also came very nicely to the downside. We've been covering this one in the past. We found a support at 70.90, also at the upper parallel trend line of this base channel, which is very common whenever we are tracking this 4th wave setback. So I'm tracking now an ongoing 5th wave after prices were able to recover slightly above this trend line. So I would be looking for more gains, especially break above this 71.80. I think could really cause acceleration higher. That would be near-term confirmation that we are ready to resume here. Let's take a look also on very quickly on the S&P 500. Now, the S&P 500 here is seen in a 5th wave, but it's an extended move. So rather than calling any significant top up here, keep in mind that this could always be in an extended 5-wave structure of a higher degree wave 3. So I think that it's much safer approach if you just wait on a next pullback to be maybe as a corrective. But even this current 5th wave, this current cycle is still ongoing and incomplete. You can see that there are no 5 subwaves up. That's better shown here on the 4-hour chart. So that was a recent very nice break here above this base channel, meaning that you are in the middle of a wave 3. So any next dip, I think that could be temporary on the way up. I'm not sure from where next dip will occur, but whenever we get a 3-wave drop, that's when maybe we could pay attention on. Now the first support is at 4,600, and then 50 points lower where you have this previous swing high. So that's the area where we want to see a limited downside if we see a dip. Okay, Now,
getting one request, Gregor. Can you show nat gas?
Natural gas.
Yeah.
I think I have it somewhere. Let me check.
So Hamashu is very rare. You get a request in like this, so you owe us, man.
Yeah, no worries.
Big time, man.
Let me just.
You're welcome.
Switch the screens here. Okay, so commodities, natural gas. As I know, I think it should be somewhere in a wave 4.
There is NGN, wasn't it?
Yeah, I'm not sure if it's right contract.
Yeah, or NGZ.
I have it also somewhere. No, that's not the right contract. Wait.
Oh, you're following the grains now too, huh, Grega?
Yeah.
Yeah, there's. The Fed can't print corn.
Exactly.
Or beans. Yeah.
Okay, so here on natural gas, I see prices just slowing down after this explosion to the upside. I think it's a wave 4. Now it can be a triangle. It can be a deeper wave 4 if maybe triangle was going to be in the middle here. But in either case, I think that there can be more upside coming after this correction is finished. So for now, it's still ongoing correction. It's very hard to say where we will complete this pullback, but let's assume that we see a drop back towards 4.70 and then we rally in 5 waves back above 5.5. Then I think that more upside here would be seen for a 5th wave.
All right. Well, so
clearly,
how do you heat your house, buddy?
Me?
Yeah, your home, your house.
Yeah, we have
gas.
No, on electric.
Okay.
Energy.
All right. Okay, so you're good. I was just worried that Putin.
With love, says DJ. Nice.
Yeah. Oh, that's beautiful. Oh, DJ, you are a romantic.
By the way, we just got PPI and it was in line, so nothing crazy. It's CPI right. Tomorrow.
Okay. So I do have Tim here now, Grega. Grega, great looks as usual. Yeah, elite analysis by Gregor Horvat, the Wizard of Waves. Thank you, buddy.
Thank you, man.
Okay. So Tim, welcome back to Face.
Hey Dale, good to be back, mate. How you doing?
How you doing? How are things across the pond for you?
Yeah, not bad at all, mate. Can't complain. Keeping me, markets keep me entertained.
Okay, so let's see what's entertaining you. Maybe you could share your screen here, and we could talk about what's on your radar. And I know you're a position trader, and I'm sure you've had a nice run in crypto.
Yeah, not too much in the crypto, to be honest, mate. Just
really?
a small, small one. I've got to be honest. At the moment, I'm a bit all over the place with what I'm actually, with how I'm sort of thinking about the markets. You know, because you just got to go with the flow, but at the same time, it's kind of it's pretty hard to add into a lot of this with the this sort of euphoria with confidence at the moment. No.
Have you ever seen more rampant speculation?
No, I haven't, mate. I haven't.
Yeah. Okay.
No, first time I've been at this since 2016, and obviously I've not seen anything much like this, and I missed the crypto run the first time as well.
Yeah. Okay. So what are you seeing here in Canada? Is this just a bearish formation, this little bounce, and we're headed lower with a weaker dollar?
Yeah, I mean, this is something that we're sort of studying at the moment, trying to figure out what's likely, because we've had all this rhetoric obviously until last week with central banks being very hawkish and everything, but obviously they've come out now and sort of talked that down a bit, and obviously the Bank of England had a bit of a shocker with the way they communicated it. Although if you read between the lines, I think you could have actually there were quite a few clues in there where it was quite conditional, and they were talking about inflation expectations, and there was a few bits that made it not quite as clear cut as perhaps some of the media coverage would have had you believe. So I think we're now moving into the kind of more of a period of uncertainty in terms of the path for central banks, or the timing of the path for central banks, and perhaps we're going to open up more of that divergence between countries again, which really we need.
All right. So are you paying attention to the little mini drama as far as renominating Powell here, or Brainerd, or any feelings on, what the market, how the markets would receive Powell not being reappointed?
Yeah, I mean, I still think Powell will.
Dollar, or
but I don't know that it would be necessarily for the dollar. I think at the moment I'm actually sort of looking, zooming out further. I look at it as more of a dollar positive picture, the bigger picture. And I think that some, this sort of thing with Powell and Brainerd will probably end up being I think it'll be a non-event. And even if she were to take the role, I think markets would digest it quite quickly, because at the end of the day, the policy isn't going to change too much. Much as people sort of want to say that it will, I think Powell's been quite clear on his messaging. I know plenty will disagree with me there.
Okay.
But yeah,
let me ask you this. So, all right. So I think you're sounding like, we're on the verge of some type of shift, instead of the dollar being, a debate between the bulls and the bears, that there's going to be some convincing price action in favor of the dollar. Am I reading you correctly?
I'm cautiously leaning that way, Dale. Yes, okay. That's where I'm.
Well, you know what, Tim? You know what I am?
There, yeah.
I'm strongly neutral.
Strongly neutral. Brilliant.
Have you ever been strongly neutral?
Always. It's a great hedge.
Here, let me do a little CNBC analysis on the Canadian. That should the Canadian take out the red trend line right here, it could sell off unless it reverses and closes back over the dotted line. And if that happens, the rally may continue unless it fails.
Exactly that. You're perfect.
Trade that.
That's it. 100% strike rate on that kind of trading.
Yeah. Anyway, that's actionable stuff. So, when I look at Canada, I mean, it almost looks pretty bearish to me that there's going to be at least another wave down. Is that what you're thinking here, and you're wrong over 25?
Yeah, I mean, what I'm looking at here is I'm thinking we're actually going to get more of a push up over time. Now, this is where it's sort of where we take more of a macro perspective, as you know, and look more towards the fundamentals and try and game it all out and figure out what's going on. And one thing that we noticed is, like with the Canadian economy, they've just got such an enormous debt load. I think it's something like I'm trying to remember what this was. So the non-financial sector to GDP ratio is 350%.
Oh my God! What's the US? 200? 180?
No, yeah, lower. It's in the hundreds. Much lower.
Oh, okay.
All right. And obviously, what that means for Canada is like this idea that any central bank, I have to say, but even Canada was obviously one of the leaders because of their situation economically. That everyone was saying, oh, they're going to hike rates. It's going to be a fast hiking cycle. But in reality, when you've got,
the government would go bankrupt, right?
Exactly. Well, certainly, I don't know whether the government would, but certainly a lot of people would feel the pain. Let's put it that way. And obviously, that's a central bank that's raising interest rates and putting that pain deliberately on the economy, which people say that politics doesn't come into central banking, but I'd argue against that. Without a doubt, there's a political consideration at all times, even if perhaps there's not a formal policy behind it.
Do you consider the Canadian dollar a petrocurrency?
Sporadically.
Okay, so that means that means you're strongly neutral about that. Okay, so yes.
Well, that comes and goes, doesn't it?
It connects and disconnects, is what you're saying.
Exactly. There's times when it sort of moves absolutely in lockstep with oil, and other times when it doesn't. And I think perhaps that connection is going to continue to fade, with Trudeau's attitude to oil and the oil and gas industry. And, it's become oil itself in terms of the actual, the production of it's become much less of an importance to the Canadian economy, but there's still a lot of industry that's connected to it. So it's sort of, I think sometimes that it's a slightly different connection from just the oil price. I think some of it is also down to the refining and everything else that goes with it.
Well, Canada's had a very hot property market. DJ's pointing out one of the members here in face, and he's talking about that being a risk to Canada.
Absolutely, absolutely.
Yeah.
I mean,
But that's a risk
though,
everywhere. I mean, the U.S.,
yeah,
Europe have those kind of real estate markets that have become parabolic, and it's not happening now. But people come in with cash over the listed price, and you can't even, squeezing out more marginal buyers.
yeah, exactly, exactly. And actually, I mean, properties, I think, is going to be a massive, massive topic for the future, in general, because obviously we've got this huge, huge problem over in the West with the sort of affordability and, and the social issues that come with that, as well as, I mean, I think the one thing that people compare this to the previous sort of property boom, but I don't think it's the same purely because of where rates are, which again, I think is another reason why rates won't go up excessively from these levels. Is purely because property underpins the wealth of the world, and obviously if a lot of that is I suppose if you want to say propped up perhaps by speculation and by all of these things, then obviously it gets to a point where it's too much, which we saw in 2008. But I don't think we're quite there now. The ratios and things in terms of the leverage is much lower than it was then, and you haven't got the credit default and all that sort of stuff going on in the background. But over in China, on the other hand, I still think that's got a long way to play out, and I think it's very, very hard to say what that means for the world. But I don't think it's going to be positive for global growth for sure. I think that property situation is just going to weigh.
I've been asking people this. Do you recall in the markets in 2008? When we were in the Great Recession, everyone said, well, China wasn't affected. They didn't hold a lot of toxic paper. They're still growing, and they're going to help pull the rest of the world out of recession. And now that what Xi has embarked on, if they could pull us out of recession, can't they put us into one?
Well, yeah, exactly. I mean, I think the dynamics are slightly different, but because obviously what they provided was a kind of a surplus. They were a surplus nation. They took trade from the rest of the world at a time when our own sort of economies were struggling. Whereas now, we've obviously turned that, we sort of relied on China as this sort of global factory. Aside from their property thing, that they don't want necessarily to be certainly the global factory at the same point in that manufacturing chain that they were before. They want to kind of move up and try and get more equality for their own people and kind of move up that value chain as well, so that they can increase their sort of consumer purchasing power at home. But it's not working, and obviously with the property side of things as well, with the kind of, because I lived through all this boom all the boom in 2008 here. I lived in Spain, doing estate agency, and I saw it all coming up then. And there's a lot of parallels, the way that everyone was speculating just wildly on property and this kind of sub economy that emerged out of it. It's the same thing that you're hearing with the stories in China. So that underpins how people feel about how wealthy they are and how much they're going to spend, and obviously all of their behavior is impacted by that feeling. So China's definitely a massive risk for the future. But because of they're still closed off from the rest of the world largely, in terms of financial system and everything, it's probably not going to be a direct financial problem. It's going to be more of something that's just going to be an ongoing. I think I'd probably categorize it as a drag. Call it an ongoing drag on global growth. Because of what China's going to have to do, and there's always the possibility of a shock. They devalued the yuan back in 2015, I think it was, wasn't it?
Right.
You can't put anything past them.
Yeah, so I'm thinking if anything like that happens, it's not till after the Beijing Olympics in February.
I would agree with that. Yes. Yeah.
All right. So do you have is there anything you have a high conviction level on going into year end? Bullish dollar, bearish dollar. Metals have been acting pretty good. You have a view on gold or silver here, Tim?
Yeah, I do quite like the way that gold's looking at the moment, because of the way that real rates are trading. Obviously inflation's up. Yeah, inflation's up, and I think inflation as well. It's still going to be hot tomorrow. So I expect that to continue for a little while longer. And obviously, if central banks, particularly the Fed, aren't going to react, then that will keep those real rates negative, which should, again, it should be good for gold. You know, and it's coming up to that level there at 1834. You know, that's the area that I've really got marked out for the next push. I think that could, you know, we could definitely see it moving on. Obviously, if we get to a point where central banks do panic, you know, and particularly the Fed, obviously because of the dollar, if they do start panicking and trying to get ahead of inflation, then obviously that's going to be negative gold and back down we go.
Okay. I appreciate that view. What's your business model, Tim? Are you on Twitter because you're looking for people to follow you, or do you offer a newsletter or some type of trading room? What is your business model? I can't recall.
Yeah, no, we've got a bit of everything. So the kind of the goal basically is to bring the fundamental analysis into sort of everyday analysis, everyday terms, because I think a lot of people get lost in the complexity of it. You know, they think it's a lot more, the economics and how economics impacts the world is a lot more complex than it really is. And obviously markets, I believe, is the best way to understand the world basically, and we try and bring it all together to people in sort of simple everyday language that they can understand, see what's going on, the kind of things that are driving certain moves, and they can add that analysis into whatever their sort of their own trading style is. We don't advocate for any particular trading style. You know, I know that you have guys on that use all sorts. And then we provide a newsletter, daily newsletter. We provide premium content as well, which is sort of more in depth.
You want to show your website? You want to show your website?
Yeah. Okay, so
macrophrodisiac, and what is that? It's not an aphrodisiac, so what's macrophrodisiac mean?
Yeah, it was a little bit inspired by aphrodisiac. You know, it's the love of macro and.
Oh, okay. You're a romantic guy, idea. Tim.
Yeah, it was David actually. See David here on the screen, David Bell. That I.
Oh, okay. Yeah.
Okay, so David started it, and I joined him a few months later.
Oh, okay.
I was originally a subscriber, and it just grew from there, to be honest.
All right, so this is your page, and the website is macrophrodisiac.com.
Yes, exactly.
What's Elon up to? Tell us.
Our general conclusion there is that nobody knows for sure, but he's probably just.
He wanted to buy the dip Monday morning.
I don't even know if it's that. There's a lot of theories about his stock as well that he's got a tax bill coming. I don't know if you've heard about. And he's got to try and get some stock out, and it's a better look if he can do it for the people.
Well, you know what? In his case, Tim, and hardly anyone talks about it. With all the government money that was given to him to develop Tesla and other things, major government subsidies that most of us would never get a handout like that from the government. I'm glad he's finally going to pay back in. How about that?
I agree with you there, mate, for sure. But then you always can move on to the next angle, you know, can't you? About would that money be well spent by the government?
Yeah.
You know.
Yeah, we'll see. Parabolic there in Tesla. So Tim, you know, I asked this. I've asked Schwager this. What's the most important advice you could give traders? One line. Most important advice.
One line. Stay humble.
Oh, beautiful. All right. Well, pride before the fall. Our humble guest, Tim Valens. And Tim, my trading warrior brother, thanks again. And just, you know, give me your best call. Where would you buy USD CAD? You were showing that chart for about 15 minutes.
I mean, I'm watching it here, to be honest. I mean, I think this is a good area to have a good try for a crack higher.
Okay.
You know, you've got a nice little invalidation here. If it breaks through the support line, breaks through the trend line, then you've got to think, okay, it's probably going to go lower. But if you can hold it, then I think there's good, you know, good scope to move up into the 126 handle.
Okay. So thank you, Tim. Great
talking
pleasure. To you. It's always interesting to talk to you, and I hope you enjoy yourself when you're here.
Cheers, man. Thank you.
Because a lot of people stuck around to hear you. So thank you very much, Tim.
Thanks, guys.
And, you know, you could follow Tim, go to his website, read his stuff, and his Twitter handle is ValaTim. Okay, right. @ValaTim. So thank you, everyone. Good luck for, you know, the rest of Turnaround Tuesday. I just want to check something out here. Let's see. Yeah, the Dow's trying to come back. Okay, I'm going to be patient, see if we could get that third drive. And that's going to be a wrap. Don't just count your pips, Tim. Count your blessings. Thanks for being with us here today. And that's a wrap, everyone. You could join the team in 25 minutes for the morning edge. Adios. And just find something to be grateful for, and you can't be depressed. That's Dr. Dale Freud telling you to find something you're grateful for today. See you, Paul. Thank you. See you, Laura, Anthony. Adios, everyone.